All right, guys. So welcome to the webinar. My name is Jesus Dominguez, and we're going to talk about my automatic trading strategy, which is called the SharkBOT, specifically designed for Ninjatrader. So we're going to talk about the composition, all the different components, and we're going to talk about some real life scenarios as we are in within trading hours at this moment, so we can see some of the action live on the screen. So okay, so the SharkBot, today is 5/31/2024. Obviously, when you review this webinar, it might be a different date. So we're going to talk about this. So what is the SharkBot? Well, it's a NinjaTrader automatic trading strategy, often referred to as an algorithmic and automated trading strategy, involving NinjaTrader platform to design, test, and deploy trading algorithms that can execute trades without manual intervention. NinjaTrader is a popular trading platform that offers advanced charting, market analysis, and trading automation capabilities, widely used by traders in various financial markets, including Forex, futures, and equities. So, depending on your connection to NinjaTrader, you have access to different instruments. So let's talk about the components. So the components is super trend indicator. Number one, super trend indicator is a popular uh, technical analysis tool used in trading to identify the direction of the market trend and potential entry and exits. It is particularly useful for traders who follow trend following strategies. Super trend indicator works in all time frames and is often used in conjunction with other technical analysis tools to confirm the signals. The way that the super trend indicator works is a calculation that goes in. Uh, Super trend indicator is derived from an average true range, which measures the market volatility. It consists of two lines, the upper band and the lower band. These bands are plotted on the price chart, regardless of the type of chart that you use, whether you use candlesticks, whether you use Renko, range, or any other candlestick parameters. Uh, the basic formula for the super trend is the upper band is the high plus the low divided into two, and then the multiplier times the ATR. So the super trend has two components: the multiplier and the average true range. We're gonna see that when I show you a live chart, so you can understand those two numbers. The signal generation. The indicator generates buy and sell signals because the crossover of the price within the super trend line. The buy signal, when the price crosses above the super trend line, the line changes to below the price, indicating an uptrend. Traders often interpret this as a signal to enter a long position. The sell signal is when the price crosses below the super trend line. The line changes above the price, indicating a downtrend. Traders often interpret this as a signal to enter a short position or exit a long position. Interpretation and usage. Trend identification. Super trend indicator helps to identify the prevailing trend. When the indicator is below the price, it suggests an uptrend. When it is above the price, it suggests a downtrend. Volatility filter. Since the super trend is based on ATR, it adapts to the market volatility. Higher volatility results in wider bands, which can help filter out the noise and prevent false signals. Stop loss placement. Traders often use a super trend line as a trailing stop loss in an uptrend, and a stop loss can be placed below the super trend line, and in a downtrend can be placed above the super trend line. For example, imagine a stock is the high price is 100 and the low price is 90, and the ATR is $2 and the multiplier is 3. So the super trend values will be as following: high band 100, lower band 90, divided into 2, which is the ATR range, plus 3, which is the multiplier, times 2, which is the ATR, is equal to 101. Uh, the lower band is 100 plus 90. Same scenario here. Divided into 2 minus 3, which is the multiplier, times 2, which is the ATR, is equal to 95 minus 6. Then it will give you 89. So if the stock price crosses above 101, it generates a buy signal. If it crosses below 89, it generates a sell signal. So oftentimes, a lot of traders wait for the pullback, and I will show you what a pullback looks like. Conclusion: Super Trend Indicator is simple yet effective tools for traders looking to follow trends and manage risk. By incorporating volatility into calculations, it provides dynamic support and resistance levels that can help traders make more informed decisions. However, like all technical indicators, it should be used in conjunction with other tools and analysis methods to confirm signals and ensure robust trading strategies. So let's talk about the super trend for a moment. So we're gonna go here. This is the market obviously is open right now. So let's just disregard this particular situation that we have here, and let's focus on generating a new chart. So we're gonna choose here the ES for a chart, and I'm opening a new chart with my default settings. What I'm gonna do is I'm gonna remove all the indicators from this chart so we can talk about subtly about super trend. So let's work on that. We're gonna remove everything that is here and talk about super trend. So as you can see, this is my chart here. You can see all the different bars from the ES, and this is the June contract. So let's bring a super trend indicator here. So if I go to my Ninjatrader, right click, look for indicators, and here I just look for a super trend, I will be able to get a super trend plotter in my chart. So a lot of people may not have a super trend by default, so you have to look for the indicator and to be able to use it. Now, what I have is I have different versions of the super trend in which I can potentially provide the one that I use so you guys can see. But I have one here is provided by Ninjatrader, Ninja.com, and it's an old version of the super trend. So let's take a look and see how the super trend looks here. And it's using different methods here to measure the trend, and you can see how this one pretty much just tells you when the trend is down and the trend is up based on the moving average. So I don't necessarily use this super trend, so I will show you the one that I use, which is based on the ATR, just like the super trend is. So the ATR trailing stop is the same scenario as the super trend. So if you take a look here, I have added the multiplier of 3 and the period of 10. Okay, so what it means is like you can take a look in here and see how the downtrend, the ES was in a downtrend from 946 basically when it broke here, 946 broke this area here, 5261, and it just was collapsing from there. It was just from here to here. The move since it broke was equals to 56 points. That is very significant for an index to drop 56 points. So we're going to draw a line here and identify the opening price, which is like somewhere around here, and you can tell how the trend was always going this way. And here, I've mentioned that a lot of traders wait for the pullback. You can see how the trend was broken here, right here. It broke the super trend, and then it pulled back. So a lot of traders like to wait for a scenario like this before they take a position. So that's really up to you. Normally you take a position right at the break, which is right here. That's where it broke, specifically around that area. So if we make a straight line here, you can see where it broke, and obviously the move into the opposite direction. How far is it gonna go? We don't know, but as we make reference to follow the trend and following the stop losses possibilities, you have here a very unique opportunity, because this one tells you exactly where your stop loss needs to be. It's right here. So this is your invalidation level according to Supertrend. Now the chart that I'm showing you here is based on Renko bars, and today we're using 4-2 Renko bars, which you can see how the chart spaces out a lot more, because the bars are a lot smaller than what they need to be, or not what we normally use. So if I change to 6-2, you're gonna see a very different scenario here, in which super trend broke a lot earlier, and the pullback was closer because we're using a smaller bar. So what do I mean by a smaller bar? We're gonna get into some details as soon as I will cover the Renko session. But you can take a look and see how the trend was always down, down, and down, because we are showing a smaller bar here. You can basically tell the reasons why it broke over here and created a little bit of chop, but nonetheless, very important if you were to take short positions, since the interview had never been taken out. You can see some wicks here that never close above this super trend line, so that's the reasons why there was no reasoning, about getting out of the position. So that's basically what we have in terms of the super trend. Now let's go back and revisit the second component of the trading system, which is the Renko bars. So Renko bars, or Renko charts, are a type of chart used in technical analysis that focuses on price movement rather than time. They're designed to filter out the minor price fluctuations, making it easier to identify significant trends and reversals. Renko charts are named after the Japanese word renga, which means brick, because they resemble a series of brick on a chart. Alright, so let's talk about Renko real quick. So I told you Renkos are bricks, and if you take a look in here in the data series, I'm using a brick size 6 and 2. So what it means is that we need every one of these bars, regardless of the time frame. It doesn't matter, because it doesn't measure time. Every one of these bars here is 6 ticks, 1.5 points. You can see right here, every bar is 1.5 points. When you see a bar, in order to break the trend, it needs to go 2 ticks above it. So that's when you get a new candle. In this case, if you measure from here to here, it should be 2 ticks. So every 2 ticks is when you're going to get a new bar. I think 2 ticks will be right there. So from here to here, 2 ticks. So every 2 ticks, if the bar prints 2 ticks higher from the close of this bar here, it will print another bar. So that means we're in an uptrend, and you can see that each one of these bars is increasing by 2 ticks. That's where we have a 6, 2. So the size of the bar is 6, which is a 1.5 in the ES, and every single time that we go 2.5, or we go 2 ticks above the last candle close, then we get another bar. So that's how they print. So we need to be sure to understand that principle, because it's very important. So we go back to the Renko bar and talk a little more about it. So each Renko bar or brick is formed when the price moves a certain amount, known as the brick size. So the move has to be away from the last closing price. The brick size is a user-defined value that can be based on a fixed price amount. Let's just say $1, or I gave you two ticks, for example, uh, of the price. Bricks are either bullish, typically shown in green or white, or bearish, typically shown in red or black. In my case here, we have green and we have red to signify uh, long or short, or bullish and bearish. Time components, no time components. Unlike traditional candlesticks or bar chart, Renko charts do not account for time. A new brick is added only when the price moves by the brick size, regardless of how much time has passed. That's why the Renko charts help you with eliminating the noise. There's a lot of noise here. It just happens that my landscaping service is here. But anyways, so regardless of the time, it only moves when price goes above the specified value that we told the candles to print. Simplified trends. Renko charts helps to smooth out the price action and eliminate noise, making it easy to spot trends and potential reversal points. Upward trends are deciphered by a series of consecutive bullish bricks, while downward trends divided by a series of consecutive bearish bricks. How Renko bars are constructed. Determine the brick size. In this particular example, the brick size is number 6 for bullish brick. The closing price must rise above the previous brick closed by at least the brick size, and then the opposite is for bearish. Plotting the bricks. A new bullish brick is plotted above the previous brick if the price moves up by the brick size. So a new bearish brick is plotted when it crosses below. If the price does not move by the brick size, no new bricks will be printed. Let's say, for example, a brick size is set to $5. If the last brick close was $100 and the price moves up to 105 or higher, a new bullish brick is added. So it went up by 5, because that's what we're looking at in here. In the example that I showed you before, in the Ninjatrader platform, we're looking for 2. That's what the 2 represents here. So 6 and 2. If the price then moves up to $110, another brick is added because it moves up $5 more. Conversely, if the price drops 95 from 100, a new bearish brick is added. So what are the advantages of Renko charts? Trend identification. So you got 2 things that help you with trend. Number 1 is the super trend indicator. Number 2 is the Renko bars or Renko chart. So Renko charts are clearly highlight the overall trend and help traders to stay the trend by filtering out the minor price movements, reducing the noise. By focusing solely on price movements that are significant, Renko charts reduce the market noise and make chart patterns more apparent. Simplify analysis. The clear visual representation of trends and reversals simplifies analysis process, especially for trend following strategies. Limitations of Renko bars. Lack of time information. Since Renko does not incorporate time, they do not show how long the price move took, which is very important for some trading strategies. And this particular strategy is not important. Lagging signals. Renko charts can sometimes lag in providing signals because the brick is only formed after a significant price move has already occurred. This has a lot to do with fills, and I know fills is a very sensitive topic because it's very important to calculate the price accordingly to be able to get a fill. Choice of the brick size. The effectiveness of Renko charts heavily depends on the chosen brick size. A brick size that is too large might miss important trends, while a brick size that is too small might introduce a lot of noise. So right now I have a 6 tick chart here. You see that there's not a lot of noise in this chart. If I switch over to a 4-2, which is what we are using today, you can see that we have a lot of noise. For example, we have noise over here. We got noise over here. You can see how the trend was broken, and you can potentially get out of a good position just because the trend broke. And in reality, uh, when you look at a bigger brick size, the trend has not broken. It's still intact. Okay, so let's talk about once again about the limitations, and we go back to it. So in conclusion, Renko bars are a valuable tool for traders seeking to identify trends and reduce market noise. They offer a simplified view of price movement, making it easier to spot trading opportunities and manage risk. However, like any other technical analysis tool, they should be used in conjunction with other indicators and analysis techniques to improve accuracy and reliability. So basically, those are the two components of the system. So let's take a look at how accurate or how inaccurate the system is. Let's continue using the 6-2. So today, I'm going to switch over to this chart here. Actually, in fact, I am going to do something different. I am going to put this here. Let me save this strategy. I should not be using this one here. Let me save this levels here. These are the levels that we're using today. And we're going to launch those levels here in this particular indicator. And this one is going to show us the strategy that we have operating today. All right, so every day we post a plan, and the plan, you can see all these different plots here automatically generated by the strategy. So in this case, if I designate the pivot to be 52.51, you will see the 52.51 here. Okay, right over here. Today is a 6-2. We're using a 4-2, so we have probably a little bit more noise regarding the operation of the indicator. So also we're using a 1-1. So let's match the same settings that we are using today in a live trading environment. Settings that we have used to generate, according to my system, we have managed to generate significant amount of points. So let's take a look at it real quick. So let's match the settings. I believe we're using a 1-1, which you can see here. 1-1. You can see here ATR period and multiply it. So I show you how that would look like in the super trend. So we're gonna remove this line here, and we'll take a look and see what it does. So just give me just 1 second, and we're gonna go and set that up. So let's take a look and bring the strategy back again. Strategy will plot automatically the super trend indicator, and you can see the green line here. You're gonna have situations in which this is gonna happen, which is totally normal. Today we're using a 4-2, so let's match those settings. 4-2, you can see how the 4-2 is still intact. The same situation that I show you in a 6-2, you can see how we did it in a 4-2. So you got a little more noise. The bigger the brick is, the less noise you are going to see. So for the purposes X scenario, we normally use the 6-2, but today we're using the 4-2. Uh, but the market's moving way too hard or way too fast today for the 4-2. So my ideal settings are normally 6-2, and I recommend my team every single day in the Discord what settings to use, in which you can see over here put the recommendation of what settings to use. But anyways, going back to the plan. So the plan is the most important thing, because when you look at the strategy works with the manual levels that I put in the system. So you can see those levels right here. A pivot was 52.51. You can see that there. We're looking for 28 ticks for targets and 28 ticks for stop. We also have a protective stop, and the protective stop is here. We're telling the system that if the ATR or super trend breaks this particular multiplier and period to take us out of the position. So like I said before, the super trend can also be used for risk management. So here's a risk management functionality built into the strategy. So let's take a look and see how that will look like. So we're going to add the indicator because that level is not the super trend 28.4. I don't normally plot. So we're going to add an indicator manually that would tell us where the line will be. So I'm going to go back here and I'm going to look for the same indicator, the same indicator that the strategy uses. And I told you that was a 28.4. So I'm going to put 28.4 here, and we're going to change the color. We're going to use a color, and the line is going to be, let's just call it for this yellow line here. So this yellow line, now that we are in a position, technically speaking, if this was to break, so this is where the stop is right now. I believe we are in a position, or the bot is in a position, or it was. I'm not sure where we got right now. Maybe we are, maybe we're not. So let's see. So it is in a position. It took a loan from 30. Not 30 was one of the levels from yesterday. So that's why it took it. So this looks a lot different, guys. But this is the way that the system will look like when it's up and running. I'm going to eliminate the noise, and I'm going to get rid of the position. So right now the stop, if this price that is here, 30, was to break below 25, it would take you out of the position automatically. So that's a protective stop. It doesn't have to wait for 7 points, even though 7 points is the number that we're looking for 28 ticks for stop. So this you can change to any number that you like, but I would recommend to have a little bit of space so it doesn't take you out of the position quickly. So let's talk about this for a moment. All right, so let's go back here to the indicator, and let's look for 28.4, which I already have there. Let's reduce this to a yellow line, and you can see the yellow line. If I activate the strategy, then you should be able to see another line. Actually is there, 28.4. So 28.4 is there. The one that you don't see is the 1-1. That's the one that you're not seeing. So we're gonna add the 1-1, which is used to take the positions. So let's add it here. Let's just do 1, 1, 1, and that is green. So those are this is what would trigger the position. So right now, if we have let's pretend that level 38 is here, it would go long at 38, and we use 7 points for stop, and we use 7 points for stop profits, which is equals to 28 ticks. But you can see how this line is so close to the bars. So if it's gonna take a long position, price needs to be below the actual bar or the actual close. If it's gonna take a short position, then it needs to be above, like I explained before when I was doing the introduction of the super trend. Now you can definitely change the settings and pick 2-2. So if I were to pick 2-2, for example, it would be less noisy per se. So let's just take a look in here and do 2-2. Now we can see how it has a little bit more room. So now you have a line here that helps with getting into a position, and a line here that it helps you with the stop loss. So you don't have to wait for the 28 ticks of stop loss to get out of your position. So it's kind of like a protective stop. So let's go back to the components in here. Like I said, it's only two things, and you can clearly see it right here. So I'll provide all of this information, all the different targets, with an incredible level of accuracy. The daily max loss and daily max profit. The next release is going to have two targets. So you can probably place the first target at 20 and the second target at 40. So you're looking for 5 points and 10 points, risking 28 ticks, or the ATR break of the period that we specify here, where it's a stop loss, ATR period, and multiplier. So all of these things are given every single day for people to use, and hopefully everybody's applying the same concept, and that's why you will get the same type of results. So yeah, so that basically are the two components. So it would be the Renko here and the super trend for entry. So it's right here, entry trigger, and order management that has to do with stop loss and take profit, which the new version of the bot is going to have two positions. So you can potentially trade 2 micros, or you can trade 4 micros with two separate targets. So that would depend on your account size and what you need to do. Then we will have here the 3 targets: upside 1, 2, 3, downside 1, 2, 3. You don't have to use all 3 targets. The system will work with whatever levels you enter. If you want to only take positions from pivot, you can just put a 1 on each one of these, and you just take trades from the pivot. If it breaks pivot, go long. If it breaks pivot, go short. So that's pretty self-explanatory there. Yeah, so we start trading at 9:45. You can change that to your desired time, and we stop trading at 3 o'clock. It means that at 3 o'clock it will not take new positions, but if the bot is in position, we'll stay in position until the time either comes or the stop loss or target is hit. So that is very important to understand. Like I said, future enhancements will have multiple targets and one stop. Well, basically, you have two separate stops. You have the fixed stop, which is 28 ticks, but you also have the stop based on the super trend. So that basically is what the bot is. If you want to learn a little more about Renko bars, I will put a link in the file so you can learn a little more about Renko. Or if you want to learn a little more about super trend, you can also do that by going into YouTube or something like that and just learn about that. But I want to highlight here that the bot relies on manual levels. As you can see here, it came pretty close to my manual target. I think I have 04 as my target, and this price here came into within the parameters. Let me see. We'll talk about two and a half, 2.5 points, which is 6 ticks. We got 1.5 points. So this basically is a valid entry according to plan at T3, which most of my 6.5 will have been right here, which my team knows that those are the rules that I have set for each and every one of the levels. The reasons for that is because sometimes we hit the levels, sometimes we come close to the level. So if you were trading today manually, this would have been your entry. And if I were trading, I would have taken the position at the opening of the 1 o'clock or 12:30 candle, which would have been right around here. So the candle will have opened right here, and I will have taken this. I can just draw a position here. Unfortunately, it's really hard for the bot to do that, but I will have taken a position right here, targeting that. Well, this will have been the final target, so I will have taken a position from here. Let's see what we got here. 12:30, and cover that 04, and it will give you 3 targets. You can see here target 1, target 2, and target 3. Target 3 was 52.25, based on the 1 to 3 risk reward parameters. So it really depends on what your preference is. For me, I'm not that picky with risk reward parameters. I just take a position, and I think at some point this level will trade today based on the price action that I'm seeing, which basically will be a return back to this area from T3, working your way up to T1. Why do I think it potentially trades? Because you got a little bit of a resistance here, which basically was a resistance from T2. That resistance was broken, and right here, you can see right here, buyers try to come in here. Now sellers got in here, and we broke above that, and it's potentially getting me to this level here. We'll find out later if it does. But at the end of the day, the components of the bots are simple. Now, where do things go wrong? Well, I can easily explain to you when things go wrong. Let's just say, for example, the bot gets is flat right now. We don't have a position right now, and we go above here. The bot's gonna go long if we cross above this 52.38. So what happens if it rejects? I don't know where it's gonna reject from. So it can switch to head back down depending on how fast the move is, or it can continue to go up and hit the target. Because we don't know what it can do, we have to basically let the bot do the work. Because in here, what's going to happen is that if it breaks above this and it goes up a little bit, the stop loss is going to move with it. And that is very important for us to understand. That things go wrong when we start manipulating the automatic trading system. So we have to learn that statistically we'll be fine in terms of risk management. It's just a matter of how fast the market is moving, what is the volatility, and it's a matter of understanding that that's the only 2 outcomes to a position. It's either going to win or going to lose. And we don't know. I don't know what's going to happen when it gets here. I know that this is resistance. You and I know that. I also knew that this was resistance, because if we're coming from below, this is resistance. If we're coming from below, this is resistance. When you come down this way, you can see exactly how buyers reacted here at this level, T2. This was support, and buyers reacted to it. Same thing scenario happened here. Buyers reacted to it, so that was support. You can see the little reaction over here. Support. You can also see the reaction here. Support. We didn't go anywhere with that, obviously. But all those, I'm sorry, this one right here, I gotta get rid of. But this was support. Support was broken, goes down and opens up to the next level. Same thing here. Resistance is broken, opens up the next level. If it breaks above this, this is gonna be the target right here. So if the bot was to go long from here, from 52.38, it will be looking for 28 ticks. So 28 ticks, it would be from here, basically there. So that's the next target. So it's not gonna look for the next level. It's because it's not. I mean, that's why when we get the next version release, you're gonna be able to see that we have two targets, and I'm planning on using 5 and 10. You know, it's just the way I look at it. But with that being said, you might need to also have a bigger stop. But then basically that's it. You know, there's really not much to it. You know, today let's take a look and see how we are doing. I run a lot of experiments, so let me go to the connections. I'm gonna disconnect Apex. I'm gonna go to my accounts, and this is what the bot's doing today. I'm running an experiment here, and this is the actual bot that was running today. I don't know how obviously accurate that is because I had two crashes today with my Ninjatrader platform, but as you know, we'll be able to tell later, you know, how the bot did. So if I go here on new and I look at trade performance, for example, and I go here and I filter this, and I go to today's day 31, I go and generate, I go here on trades, you can see everything. If I disconnect from here and I select the account, uncheck that and look at the instrument, and I look at the today's day, these are the trades that the bot took. And according to this, again, it could be misleading or not, I don't know, because I had two crashes today, but we're supposedly up 35 points. If you look at the whole month, from the 1st to the 31st, and I run this on simulation because simulation accounts give me a very unique opportunity. And the very unique opportunity that it gives me is that I can run multiple things at once. So what I mean by multiple things at once is I experiment a lot. And what I do is whatever I'm experimenting with, I use a trade copier to copy my trades. So whatever it is that I want, I got a trade copier here, replicando, and duplicates my tray on certain things that I don't really want to get too detail into. But let's take a look here, my account, and we're gonna select simulation. We're gonna pick. Let me see why isn't that is not generating any trades here. I should have trades. It should be only the ES. It should be all the way to today. And this is not a back test or anything. These are actual trades that took place. And I know there were some mistakes made, and when the platform crashed and things like that, those things do happen with every platform that is out there. But as far as I know, we're 135 points. We're up 139 points for the month. When you look at this analysis, it will tell you that from the beginning we were green. We'll hit a peak right here, and then we'll got a couple of days of losses, and then we peaked once again. So those are things that I don't. It's not a back test. It's not anything. I don't control the fills. I don't control the size. I don't control whether you're switching for from minis to micros because you get different fills. I don't control any of that. That's why I run this in simulation, and sometimes I get discrepancies as well. But the entries are entries. Is it gonna take a trade here at 38? If it gets to 38, it will. I don't know if it's gonna fill at 38.25, 37.75. It all depends how fast it goes through that area, and it all depends also on the quantity that you're buying. It all depends whether you're doing a micro or mini and so forth. So I had no control over that. And I know that we're going to have mixed scenarios, but it just goes to show that, I'm not necessarily selling a butt here, but what I do is I develop trade plans, and those trade plans is what people in my group rely on to be able to make good decisions. Like I said, below this area here, I did not want it to be long until T3. That's exactly what the process calls for. If you're short from here, you want to wait until you get into this area. When you get into this area, you can flip for long, and that's how it works. All right, guys, well, that's pretty much all I got. Thank you so much for your time. Have a great day.